The final part of Tutorial Series 1 of Bite-Sized Corporate Reporting will look at the effect on our answer if changes are made to information given in the question. To appreciate the effect of the changes, you will need to watch Part 1 and 2 of Tutorial Series 1. A link to Part 1 and 2 as well as the question is included in the description. The relevant standard as a result of the change in the purpose the building was acquired from being an administrative office to earn rental means the building now falls within the scope of IAS 40 investment property. On initial recognition, the building shall be measured at cost, no different from IAS 16 property, plant and equipment. Although IAS 40 permits ABC Limited a choice similar to IAS 16 on subsequent measurement, this will be either the cost model or the fair value model as opposed to the cost model or the revaluation model under IAS 16. On initial recognition, as with IAS 16, IAS 40 requires the building to be measured at cost of 10.5 million, comprising the purchase price of 10 million, stamp duty of 450,000 and legal fee of 50,000. Likewise, the renovation costs incurred would also be capitalized under IAS 40 as it is an enhancement to the building given the building was left by the previous occupant in an untenantable condition. The renovation was necessary to bring the building to the condition for intended use and result in probable future economic benefit in excess of its originally assessed standard of performance. On subsequent measurement, if ABC Limited adopts the cost model, in which case the building is carried at cost less accumulated depreciation and impairment losses. However, as ABC Limited wishes to adopt the fair value model, ABC Limited shall remeasure the building to fair value at each reporting date. The changes in the fair value shall be recognized in the statement of profit or loss as either a fair value gain or a fair value loss. Finally, as the building is subject to annual remeasurement to fair value, no depreciation shall be charged to the profit or loss. ABC Limited should note that similar with the revaluation model of IAS 16, if the fair value model of IAS 40 is adopted, any future purchase of building falling within the scope of IAS 40 would also be subject to the fair value model. The effect on the calculation resulting from the adoption of IAS 40's fair value model is as follows. 1. There will be no depreciation charged to the profit or loss in all 3 financial year ends of 30th June 2019, 2020 and 2021. 2. As the fair value for the financial year ended 30th June 2019 is not stated, we shall assume the fair value equals the carrying value as at that date, resulting in neither a fair value gain or a fair value loss. 3. In the financial year ended 30th June 2020, ABC Limited should recognize a fair value gain of 0.5 million in the profit or loss arising from the remeasurement to fair value of 12.5 million. 4. The decrease in the fair value as at 30th June 2021 would result in a fair value loss of 1.5 million being recognized in the profit or loss for the year. This concludes Tutorial Series 1. Here we look at the application of the recognition and measurement principles set out in IAS 16 Property, Plant and Equipment and IAS 40 Investment Property. Till my next tutorial series, thank you and have a nice day.